Honestly, more companies should spend less time celebrating profit headlines and more time showing us their cash flow discipline. When we look at reported profits, can we actually rely on those numbers? It's the single most quoted number in financial markets. But if you ask me, I don't like it. It doesn't really tell me much. And in my experience, it can be downright misleading. You see headlines like these and it feels like we're looking at something concrete, something solid. But we're not. If management keeps tweaking the policies or restating past financials, the comparison doesn't make sense anymore. Some headlines highlight record profits, but when you look closer, half of it comes from a land sale or a one-off currency gain. And that is not recurring. Think of it like looking at a picture that has been edited. It might look impressive, but it doesn't necessarily reflect economic reality. In other words, they take profits a few steps further and test whether those profits actually sustain and convert into long-term value. The accounting profits ignore working capital dynamics. Not only that, but they also ignore investment requirements. In my mind, it's a much cleaner signal and it's a lot less prone to distortion. Great companies know this. They know this because they highlight their free cash flow figures, they explain the drivers, and they make sure that investors trust those numbers. So that's the difference between high and low quality earnings. They adjust the reported profit for non-recurring items to show clean underlying earnings. You almost never see that in our region, and I wish more companies did that.